Okay, let's just jump right into it. Today, we're breaking down a fascinating strategy, one that claims you can turn a tiny weekly investment, we're talking about the kind of pocket change most of us lose in the couch, into a seriously substantial monthly income. So here it is, the big question, the one that probably made you click. Is it actually possible to build a life-changing income stream from what is, let's be honest, pocket change? It sounds a little too good to be true, right? Well, stick with me. Let's dig into how this is all supposed to work. And this is where it all begins. $25. That's it. We're talking less than a few fancy coffees or a single pizza delivery. The whole idea here is that these small, consistent actions can be way more powerful than waiting to make one big, massive leap. And this? Well, this is the destination. Over $5,000 every single month. Now, I know what you're thinking. The gap between that $25 and this number looks like a canyon. But there's a bridge that connects them, and it's built using a powerful yet surprisingly simple financial engine. So, what is this secret engine? It's not some complicated Wall Street trick that requires an advanced degree. It's a strategy called DRIP, and it's the absolute key that unlocks this entire process. DRIP. It stands for Dividend Reinvestment Plan. And in plain English, it just means that when a company you've invested in pays you a dividend, your share of the profits, you don't take the cash. Instead, that money automatically, without you lifting a finger, goes and buys you more shares in that very same company. It's like a closed-loop, self-fueling system designed for one thing: growth. And you can see how this creates this incredible, powerful feedback loop. You own shares, you get paid for owning them, and that payment immediately buys you more shares, which means your next payment is even bigger, which then buys you even more shares. You see, it just keeps feeding itself over and over again. This is the absolute perfect analogy for it. It starts off so small you can barely even notice it, but with time and consistency, it just keeps gathering more and more momentum. That right there, that's the pure, beautiful power of compounding in action. But here's the thing, that basic drip strategy, that's just the engine. It's great, but to get to our destination of over $5,000 a month, we need to add some serious fuel. We need to supercharge this thing. And the hack to do it is brilliantly simple. You don't just sit back and let the dividends do all the work. You help them along by adding that $25 week in and week out, like clockwork. This is where your own discipline becomes the rocket fuel for the entire strategy. And this is why it's such a game changer. Adding your own money just pours gasoline on that compounding fire. And on top of that, by investing regularly, you're using a really smart technique called dollar cost averaging. It basically smooths out the market's crazy ups and downs, because sometimes you buy when prices are high and sometimes you get a bargain when they're low. It's a huge stress reducer. Okay, so let's recap. We have the engine, that's drip. We have the fuel, our weekly contributions. Now we need the vehicle itself. And the right kind of portfolio is absolutely crucial. So let's look at the components you'll need. First things first, you need a solid foundation. These are your blue chip stocks. We're talking about the household names, the absolute giants of their industries. They're reliable, they're stable, and they have a proven long-term track record of rewarding their shareholders. This is your bedrock. Next up, we add the dividend aristocrats. And yeah, it's a very exclusive club. To get in, a company has to have increased its dividend payout for at least 25 years in a row. Think about that for a second. Through recessions, market crashes, global crises, they kept giving their investors a raise. That's a powerful signal of incredible financial strength. Now, to boost our monthly income, we're going to sprinkle in some high-yield dividend stocks. Their main job is to pay out a larger percentage of their share price as dividends. Now, they can carry a bit more risk, but they are a super important part of our income generation machine. And finally, you want some stocks that give you the best of both worlds. Growth-oriented dividend stocks. These are companies that are still expanding like crazy, but are also mature and profitable enough to pay out a dividend. Think of some of the tech giants who are still innovating at a massive scale. So based on those categories, here's an example portfolio from the source material. You can see it's a nice, diversified mix: energy, consumer brands, healthcare, retail, plus an ETF that automatically tracks all those dividend aristocrats for you. Just take a look at those dividend growth and price appreciation numbers. Pretty impressive, right? Okay, so now let's see what happens when we put it all together and let it run. Okay, this is the moment we've been building towards. We've got the engine, we've got the fuel, and we've got the vehicle. So let's fast forward 30 years and see the payoff of all that patience and discipline. And here is that snowball effect in action. After 10 years, that small weekly investment has grown to nearly $28,000. Not bad at all. But just look at the jump in the next 10 years, and then the next. That accelerating curve is the magic of compounding made visible. It takes time, but eventually the momentum becomes almost unstoppable. But this right here is the most incredible part of the whole strategy. I want you to really look at this. Over 30 years, your total contribution, the money that actually came out of your pocket, is $36,000. But the growth that came just from the dividends reinvesting themselves, over $464,000. Let that sink in. The system you built generated far, far more wealth than you personally had to put in. And it all leads right here. The ultimate result of that snowball effect. Over $5,000 in passive income every single month, all starting from just $25 a week. So we've seen the whole journey, right? From that tiny little seed to this massive fruit-bearing tree. Which brings us to the most important part of this whole discussion, your first step. This really says it all. The idea of starting a financial journey sounds so huge and intimidating. But the truth is, the biggest barrier for most people isn't money. It's just making that decision to begin, to start with that first dollar. And that really is the final thought. We've looked at the engine, that drip strategy, we've seen the fuel, those consistent contributions, and we've definitely seen the potential destination. So the question to leave you with is a simple one. What's stopping you from getting started on your own journey?